Hey guys, happy 4th to everyone who celebrates. Let's take a look at crude oil. And today I'm going to look at it through the lens of the professor trades, Armando. We're going to look at it through the lens of his fib setup. And I'm trying to emulate the way he has been teaching us to observe the markets for scalping, for short term trading opportunities. So it's a different, much different, simpler way to look at the context of price so that we can get the highest probability setups, either long or short, doesn't matter, based on the structure of price. Let's dive into the analysis. All right, so here we are looking at a short-term chart of crude. Now, I've already thrown some trend lines on here. I've changed my Elliott wave count because of the depth of this drop and how much time it burned off the clock, and then it came back down and touched my signal line. You remember in the rooms the last day, maybe 2 days, I've been talking about 82.49 as an important level. That's why the little puke emoji is on there. I thought it was going to let go, but it didn't. I took off my shorts. I was short from over here. Now I have one remaining short trade. My basis is 83.73 right in here on the runner. I've already taken the gains, so it's just a runner remaining. So let's look at the structure of price. I'm going to try to channel my inner Armando. By the way, if you're watching this video from YouTube and you're like, who is Armando? Armando has a great trading club called theprofessortrades.com. Easy to find. It is a fantastic club. Armando's a great teacher. Very simple methodology, very effective, amazing for scalps. All right, let's do this. Let's look at structure and identify the most recent high, call it a swing high, and then we look for the next low, call that a swing low. Now, look, this is for scalpers. This is a 21-minute chart. I like to use Fibonacci time frames. Why not? And we have a higher high here. And actually, before that, we had another lower low. So just looking at this, you can see that at the moment, the structure is pointing down. Now, there's a very flimsy trend line right there that price is actually at this exact moment bumping up against. So let's put Armando's fib tool on the structure. So what we want to do is originally you would have Armando's fib tool at this swing high and this swing low. But we already know it made another swing low. So let's go from this high, 84.38. By the way, this is crude oil futures. The pricing is going to be different depending on what broker you have. And the low is 82.46. Now I'm using the magnet because I like to get the price exactly on there. 82.46. Well, would you look at that? So price. Now this is not Armando's fib tool. This is my fib tool. I have a solo for 764 and a solo template for 618. So before I get into Armando's fibs, would you look at that? It is striking the 764 to the penny. That's why I like to use a magnet tool and get the daggone thing right on the penny, because sometimes it's spooky how price interacts with these fibs, sometimes to the penny. So then I like to just drag this over visually just to keep it as clean, keep it real clean and simple. So, okay, so price came down, bounced off of my signal level, 82.49, almost to the penny, exceeded it by a couple of ticks, came back up to the 764, came back down again. So now what I'm going to do naturally, I still haven't gotten to Armando's fibs, but what I'm going to do naturally is this swing high to this swing low. Where is that? That looks like it's already exceeded the 618. But let's throw a fib tool on there just visually so we can see where we're at. So that low is 83.02. Look at that. It kind of looks like it wants to come up to the 764. It's probably already exceeded the 618. So it's already exceeded the 618. So let me grab the 83.93 level and drag it over. So I'm doing this so you guys can create your charts if you're new to trading or new to Armando's club or watching this video on YouTube. This is how you do the fibs. Look for a swing high, look for a swing low, look for the 618. Really, the zone is 618 to 886. So at the moment, we have a high and a lower high, and at the moment, a lower high. So structure is pointing down at the moment on a 21-minute chart. Super duper low time frame stuff. We have a lower low and another lower low. So structure is pointing down. So put a trend line on the two lower lows, put a trend line on the two lower highs. That gives you your structure. Now we're poking above there right at this moment. So I'm about to take off my runner short has a +5 stop on it right now. I don't use break even stops anymore. If it goes in my favor, now I don't immediately move the stop, but when I have a runner on, even if I'm way in the money with that runner, I put the stop at like +5, depending on how far away from me the price has moved. Sometimes my stop is +10. I'm never going to let a winner turn into a break even. I'm moving. Now I don't move the stop too quickly. Anyway, that's kind of another video on psychology and trading. But for right now, just looking at structure, this is resistance. And so naturally, if this structure is going to hold, this is not going to come above 83.93. So if you were taking a short trade right here, if your bias was to be short, then you don't want to stay in that much above 83.93. But it really depends on your definition of risk. The real level to watch is that, I think, a more important level is what I mean to say, is the top of is this high right here at 84.38. So what Armando might do is you identify the roof, you identify the floor. So we've just done that. So now let me put on Armando's fib setup, and we're going to use that high and we're going to use this low, 82.46, and we're going to drag it over 82.46, drag it over to about here. And then I have Armando's fib set up, saved as a template, because I'm always blinking back and forth between a bunch of different setups that I have. And I'm going to make them a little brighter so you can see them. Well, look at that. So we came back up. We made it high. We made a low. We got right into the zone between the 618 and the 886, got rejected, did not make a new low. And then now I think we're moving in an overlapping corrective looking wave. And we are right at the 618 again. So is it going to make another high? This would be the temporary structure to watch. Just because it poked above that doesn't mean I'd go long. I don't know. This is looking like it's pointing lower to me. So a possible trade would be to get short in here. Anywhere below here would be short opportunities. However, if this thing comes up and gets a close above this high, who knows? Now I gotta do more Elliott wave. This is where Elliott wave shines, but I haven't done my Elliott wave homework today yet. This is sort of left over. This level I'm going to get rid of, because those levels were left over from had this caught a wave 4 here, but it didn't. It kept coming, and that's why I moved my labels over. So I'm viewing this C wave. Now I'm back into talking LA wave. This C wave, it would be reasonable for it to terminate at this 100% fib. And it did get rejected hardcore there, which is why that's the ceiling, 84.38. So, but just keeping it, forget LA wave, just using Armando's fibs, the 618-886 zone is a typical zone that you can scalp looking for 20 pips only. Well, Armando posted in the room, by the way, if you're not in Armando's room, you're going to get these trade signals. But price came right up into that zone and got rejected. You got way more than 20 pips. You know, you could have caught 60 pips, 50 pips, 40 pips, easy, just based on a simple fib setup looking for that zone, 618 to 886. And now we're doing the same thing again. Now, if as I just demonstrated, this is now, yeah, actually, let me do this. This will be the last measurement I'm going to put on here for you guys. And I do this all day long. All I do is measure stuff. I don't care about news. I don't care about words. I don't care about your opinion, my own opinion, or I don't care about my own opinion or my own bias. I'm just measuring stuff. That's the game. So I like to go back to my solo fib, but then I'm going to put the 764 on there. And this is, if I were actively trading today, which I am not, I'm just managing my existing trade. But this is This is this is like a this is, it's a Russian doll. If you know what a Russian doll is, it's just fibs inside of other fibs. So we're at the 618 of the larger structure, and we're in between the 618 and the 764 of the smaller structure. So, it's a holiday though, low volume. So I wouldn't really want to initiate anything because this could do anything on low volume. They could run it back up to here and then drop it. Anything could happen. But if you're like really pressed for a trade, this is not a bad short area to try a short scalp. I wouldn't, I mean, just that's between you and your own definition of risk on a holiday, but I'm not doing anything. But these are the levels. So, the ultimate stop is 84.38 up here. That's because that would be where the structure changes and you made another higher high. Right now, we got two lower highs and we got two lower lows. And we're at the 618 of a couple different timings. You got the 618 of the larger structure and you're at the 618 of the smaller structure. So this could be where price gets rejected. All right, guys. Listen, I'll keep it short. Have a fantastic holiday. And I'm just going to mention this one last thing. This is just my personal experience from actively short-term trading for about 5 years. What I've learned from my own personal way of trading. I was just commenting that I measure stuff. That's all I do is measure stuff all day. I'm almost 100% technical trader. That's what I'm about. I'm about the fibs. And once I discovered Armando's club and his methodology, which is uber duper simple based on fibs, for a scalper short-term trader, that's all you need is a couple of fib setups on your tool and learn how to identify structure. I barely use technical indicators anymore. I barely use RSI. I mean, I do use it. I kind of blink those tools on and off. But if you just learn how to measure stuff, as I just showed you, and learn how to emulate Armando's measuring and look at his charts, look at his videos, and emulate how to measure things like that, you're going to improve the consistency of your trade. Because this is another thing I was thinking about. If you know about the 80-20 rule, if you don't know about Pareto's law, look it up. This is the last thing I'm going to say, a little bonus nugget from my own experience in life and in trading. The 80-20 rule states that 20% of your, 80% of your gains is going to come from 20% of your trades. And I'll take that to another level. 80% of the price action is meaningless. 20% of the price action is where you want to focus on. So how do you know the difference between the 80% of the price action that's meaningless and the 20% of the price action that you should be paying attention to? The way you do that is with fibs. Think about that for the rest of the day. We'll get back to that. We'll cover that a little bit more on future videos. And I'm also going to be getting a little deeper into Elliott Wave, of course. I'm always about Elliott Wave. But for the short-term scalping stuff, if you're not in Armando's club, you're missing out big time. Of course, you're watching this video, you're probably already in his club. We're in there together every day, identifying the 20% of the levels that are important and learning how to ignore the 80% of price action that's just noise, and it'll get you chopped up and blow up your account. Don't do that. Cool. All right, you guys, enjoy the rest of your holiday, and I'll see you in the room. Bye-bye.